Good morning. Good morning. Thank you guys so much for being here today. I'm so excited to talk about this topic. We are moving into summer buying season, so it's a great time to talk about pre-qualification versus true approval and making sure that your buyers are ready to put in their offers as we move into the summer buying market. So I'm going to jump right into my slides here. Let me share my screen. All right, you guys. So I'm Colleen Wood with the Wood team over at Hometown Lenders. I'm the producing branch manager, and I write all the loans that come through our office. And that's important. So it's important for you to know as we're moving into talking about this topic. Today, for our Level Up Real Estate webinar, we're going to be talking about true approval with a $5,000 guarantee behind it. So this is something that we're really passionate about. This is something that we've been working on for a really long time. This is a product that's been out for a couple of years, but it's something that really separates us as your lender. So I'm really excited to remind you about it as we move into our buying season. All right. So right from the beginning, what is the expectation of a lender? What do you expect from the lender? What does their client expect from your lender? And for our buyer, what a buyer is looking for from their lender is they are looking for honest advice and coaching. Most of our folks have either never bought a property before or it's been a long time, and things change often in mortgage. So, and when people get a mortgage 10 years ago, they're not trying to learn how to get a mortgage. They're just trying to get the mortgage. They don't care about that. So we always want to be coaching and giving great advice. I always talk about giving the mama bear advice. I can't hardly help myself. Part of my job is I always want to leave all of my clients better off financially than when I found them. So if I think that they're doing something and they ask me what it is that I think about their investment, if I see something that is really glaringly obvious, and I know you guys are the same, you're going to say something, or you're just going to say, hey, now might not be the right time. I've given that advice to lots of folks where it's not the right time for them to buy. Or, I just talked to some folks recently that they have 6 kids and the majority of them are still in daycare, and adding a house payment on top of that was really going to strap them. So the advice to them was, hey, let's get all those babies in kindergarten. And that's part of what I'm talking about when it comes to mama bear advice. And it's something that my clients expect of me. They're looking for certainty in their approval. If they are told that they are able to purchase a home, they're betting on that they're able to do that. They believe me when I say that they're able to buy a home, and they should. The expectation is there that if they have a letter from me, that they're not going to have any problems buying a home. But you and I know that we need more than that. They're also looking to close on time without any major hiccups when it comes to closing. So there's a lot that goes into selling a home, vacating that home, buying the next home, moving into that home. If their work changes, there's money being moved around, there's financial things going on, and they're counting on us to get our job done on time and on schedule. And that's really, really important. For you guys, you're asking that I am going to provide excellent customer service to your clients, that I'm going to validate the referral because you sent them my direction, that they're going to be very well taken care of, like you said that they would be if they worked with me. So it's really important for me to do what it is you say I'm capable of doing. That's really important for me to carry that flag. Absolutely. Number 2, close on time. You guys have contract dates. It's really important to close on time and on the closing date, not within the grace period. That I hear a lot of realtors say that lenders that will literally take a closing date all the way to the end of the grace period, and that will be the day that they close. And that's just not acceptable to me. We close on the close date unless there is something major that is barring us from being able to do that. But then everybody's all on board with that, and we've already talked that through. So we close on time. That's amazing. The last thing is protecting your commission check. You know, I know you love what you do. I love what I do. But at the end of the day, we wouldn't do it if we didn't get paid. So you're providing for your family, you're providing for your dreams and your future. And so in order for you to do that, you need to get a commission check. And so when you hand me a buy sell, you're asking that I protect your commission check. And that is a reasonable expectation. But of those expectations, the most important expectation to the buyer is certainty in their ability to purchase a home. So if I say, yes, you can buy a home at this purchase price, they need to feel that they're able to do that. And we need to be able to take that to the finish line. That is a reasonable expectation for a buyer to have of a lender. And unfortunately, for some lenders, that doesn't happen. So that's why we're having this conversation. For you, the most important thing that you expect from me is to protect your commission check. If you've gone to all the trouble of finding this lead, nurturing this lead, showing them properties, several properties, going under contract on a property, by that point, you're hoping that I can take your lead all the way to the finish line so that you get a commission check. That is a reasonable expectation of a lender for a realtor. Okay. So this is your mortgage application and pre-approval. This is, right from the beginning. My job starts right from the beginning. When you guys get a new lead, you have a new buyer, and they're going to need to get financing. That's one of the questions that you ask is, hey, are you going to be able to buy with cash, or are you going to need financing? If they need financing, your next step is that you're sending them over to me so that I can get them pre-qualified and moving forward so that you can shop with them with confidence, that they can shop with confidence inside of their price point, inside of their parameters of what they want their mortgage payment to look like. Because sometimes it's not just about, hey, this is what you can afford. It's about what is your comfort level. I have a lot of buyers that really don't feel very comfortable with a house payment much over $2,500. Sometimes it's $1,700. So even if they have the ability to buy higher, part of my job is making sure that they're comfortable with this new house payment in relation to the way that they live, the other expenditures that they have every single month. And maybe they just want to do a lot of traveling, or they don't want to be house poor. That's a big conversation that's happening right now with our appreciating prices. So right from the beginning, this is when we're having our initial consultation with a buyer, or a buyer has gone online to try to find a pre-approval letter, they'll call it. And you'll see that lenders and realtors both will misconstrue the two terms pre-qualification and pre-approval. They'll use them interchangeably. And the truth is, you guys, it is not the same thing. You'll see lenders that'll say, I'm sending you a pre-approval letter, but it's not a pre-approval. And that's why it's so important to educate everyone on what the difference is, because the difference between these two levels of qualification are very, very, very different. So let's dive into that. A pre-qualification. This is just a conversation and a credit pull. In fact, some lenders don't even do a credit pull. They might do a soft pull, or some of them, a lot of these online forms. And preparing for this, I was just kind of Googling and seeing how easily I could get a pre-qualification letter. And some of these fillable forms for some of these online lenders literally have the buyer type in their credit score. Okay. And so some buyers are shopping with a populated online form that the system, a computer, does some math and says, congratulations, you're pre-approved, when they're only pre-qualified for a mortgage. But you guys know, as listing agents, if you knew that your buyer was putting in an offer without a credit report, without any documentation of income or source of down payment, that should make you very, very worried. Okay. So a lot of your pre-qualifications, again, they're just a conversation and a credit pull. Little to no documentation is required for that. None. It's based on the word of the buyer. So if the buyer says that they make $100,000 a year, the intake person or lender is going to put that into the system. Okay, $100,000 a year. Okay, cool, great. And then it's decisioned by the lender, like myself. So intaking the application, asking all the questions, doing the consultation, but then it's decisioned by me or decisioned by an intake person. Okay. Or on some of your big box folks that have a call center type mortgage, they're not even the way that they verbalize it. That's not even a licensed lender that's talking to people on the phone. And so the way that they verbalize it, they don't say that they're approved. They don't say those words, because if you say those words, those are things that have to be said by a licensed person. But the reason why some of these call center online mortgage companies are so cheap is because they're cutting out the highest paid person in the cycle. The highest paid person in the cycle is a loan officer. They're the ones that get paid the most. So these call center mortgages are cutting costs by putting unqualified people, so unlicensed people in a call center, and they're intake people. Okay. They're just intake people. And they're doing some math and they're saying, based on this, it looks like you would be pre-qualified for da da da. Okay. But this is not a pre-approval. Okay. It doesn't even have to be done by a licensed person if they use the right words. All right. It's not even breaking the rule. That's why some of your big box stuff will die at the very last second, because they're waiting for an underwriter to decision the file, and they wait till the very end for an underwriter to decision the file. So your intake people aren't able to do that. So luckily, I'm a licensed lender. I do my job really well. I mean, I set up the consult really well, and do a pretty good job of pre-qualifying people right up front. But at the end of the day, you guys, I'm not the one that makes the decision. A lender is not the one that makes the decision on the file. The underwriter makes the decision. So a pre-qualification is what the majority of your lender letters are. Okay. It's just a conversation in a credit pull, maybe, and probably not with any documentation. So as a listing agent, when you know that the majority of your letters are just a conversation in a credit pull, when you're working for the seller, this should concern you a lot. And this is why sellers and listing agents love cash. Right? Because we're going to dive into all the things that can go wrong with a pre-qual letter. Okay. Moving over, a pre-approval. This is a full application with a full tri-merge credit report. So all three bureaus, it's a full credit report. We do a full inquiry and we look into everything. All qualifying documents are obtained up front, and a full income calculation. So if they're self-employed, we're not just having them tell us, that they grossed out or they netted out. It's a very common thing that people will say, well, I netted out so-and-so. Well, that has nothing to do with how I have to calculate self-employed income. Okay. So on a pre-approval, there's a full income calculation happening. I do a full income calculation on a pre-qualification for self-employed people and for all my borrowers. But again, I'm not the final decision maker. So where this really changes is that on your pre-approval, all of your documentation is reviewed and approved by the actual decision maker, the underwriter. Credit, income, assets, source of down payment. All of those things are reviewed and approved. So they're actually conditioning for more documentation if we don't have a full picture from the buyer before they ever go under contract on a property. Okay, that's what a pre-approval is. It's an underwriting review and approval. It's a preliminary approval. It's a conditional approval. Conditioned on these things moving forward, these folks are going to be able to get a loan. That's what a pre-approval is. It is not your initial intake that you see most of the time. Okay, a pre-approval is different. So a pre-qualification. What could go wrong? Any of you guys that have been in the business more than 5 minutes have seen what can go wrong with a pre-qualification, because people, not being vindictive or awful, they don't know that there are some issues that can come up when it comes to underwriting. And sometimes they don't tell the whole story. Sometimes they are adding into their income the overtime that they've gotten for the last month, but that hasn't happened for the last 2 years. Sometimes we find out that, they're really not going to occupy the property if it's going to be a primary residence. Sometimes there's old foreclosures or forbearance, or there's a pending divorce. There's child support that comes out in the wash. There's it's a seasonal employee. I actually had a client who was under contract on a property, who was shopping lenders. So he was super vague with me. And I was finally able to dig deep enough to find out that he was a seasonal employee for the first time. And he was under contract with a pre-qualification letter from a big box lender. Okay, so that property was off the market and under contract with a letter from a big lender that on an employee that had been seasonal for literally a month. And he worked for a landscaping company. And at the end of the season, he's not going to have a job. Well, if you know anything about underwriting guidelines, in order to use seasonal employment, we have to have a 2-year history of it. He didn't. So I was able to get enough information to then say to him, hey, I know you're talking to me because you're shopping lenders, but you don't have a file. You should not have that letter. They should have dug deeper. And this property is under contract and taken off the market with a letter when you're not able to buy this property. Okay. And you guys know that properties that come off the market because they're under contract and then come back on the market have a black eye. People wonder what's wrong with this property. It must not have passed an inspection. That's what people say. And so it's a huge issue to take a property off the market and then put it back on again. So with a pre-qualification, lots of things can go wrong. Lots of things will come out in the wash. It's an issue. And so this is what a pre-qualification letter looks like. This is just a screenshot of our pre-qualification letter. It says, this letter is to inform you that I have reviewed income, asset, and credit information for the above mentioned buyers based on automated underwriting and my assessment of these. They have been pre-qualified for a conventional loan to purchase a subject property at an offer price of $800,000 and terms listed in the real estate contract. The pre-qualification is subject to satisfaction of the following conditions. Normal stuff, sales contract, appraisal, title commitment, but look at the last one. No material changes in your financial credit or financial condition or credit worthiness prior to the funding of this loan. Okay. So this is again reviewed by a lender, not an underwriter. It's based on automated underwriting. Nothing has been verified or documented. I believe, my team believes, that you deserve and need a guarantee. We have so much competition in our market that we need a guarantee. When we write a letter, it needs to be a guarantee. When I sign my name to something, it needs to be a guarantee. And so we have changed the term pre-approval because it's so commonly misconstrued with pre-qualification. We have changed the term to true approval. It is a true approval. Okay. So a true approval is a guarantee. And we believe in it so much that we're willing to put our money where our mouth is. Okay. So this is a true approval letter, and I'm going to read the whole thing because it's so important how this reads. And a listing agent is going to read this and think, oh my goodness, this could not get any better. Okay. Please be advised that the above referenced borrowers have been approved by a DE certified underwriter for the home loan of their choosing. Underwriting has reviewed credit, income, assets, and various other documents listed below that could affect loan worthiness. Since the borrower has been completely underwritten, all that remains is to update the approval regarding property details, including an acceptable copy of the sales contract, satisfactory appraisal, satisfactory title, evidence of homeowners insurance, new disclosures reflecting the property information, and perhaps updated income or asset information as needed. Unlike a pre-approval issued by a loan officer, The above referenced borrower has been underwritten by the actual decision maker, the underwriter. The above referenced borrowers have earned true approval to shop for their next home with confidence, as they are definitely approved to do so. Sellers can rest assured that the above referenced borrowers can afford to purchase a home, are creditworthy, and have required down payment for the loan of their choosing. Underwriting has verified the following information to achieve loan approval, and that's all listed. Okay, this is massive. This is a massively different letter than just a pre-qualification letter. It's massive. And again, I believe in putting our money where our mouth is. So we put a guarantee behind our true approved buyers, and this is what it looks like. We have a $5,000 guarantee to close on time for all of our true approved buyers. Okay, it's a hometown closing promise for our true approved buyers, and it's a really, really big deal. This is what it looks like. Okay, so it's a $5,000 guarantee to close on time. This is special just for my team, just for the Wood team at Hometown Lenders. This is special. I don't know of anybody else that's doing this. This is very, very special. And there are, of course, some restrictions. So the buyer has to be 100% true approved by an underwriter at Hometown Lenders. It only applies to purchase transactions. It's a $5,000 guarantee to close on time within contract grace period allowances with the following conditions. Hometown Lenders must receive a sales contract signed by all parties, including a 30-day escrow period between HTL receipt and contract end date. Federal holidays are not included. Okay, so this is saying like, hey, don't send me a 5-day contract. Like, we still need time to do our job, but we will close on time. So it needs to at least be a 30-day contract. The appraisal must come in at or above purchase price. So if your appraisal comes in short and we're not able to close because you guys can't get to resolution with the buyer and seller, obviously I'm not going to pay out on something that's not my fault. The borrower must satisfy all conditions and document requests within 24 hours. So if we need something from them, the buyer's side of this is that they need to respond and get us what we need. So they can't just sit on it and not do their part. Everyone has responsibility in getting a file to the closing table. Hometown Lenders cannot be held liable for third-party circumstances that may delay closing. These include, but are not limited to, final inspections, appraisal turn time, loss of employment, new lines of credit affecting pre-qualification, seller delays, property conditions or repairs, unwarrantable condos or PUD, and weather-related access issues. So just saying, like, if there's something that is outside of our hands, like, we're not in charge of that, we're not held responsible for that. This is really talking about our part of this. Are we doing our job on time like we said we would? And that's where the $5,000 comes in. The $5,000 is a guaranteed split. So if we didn't close on time and all of these conditions were satisfied, 50% of that $5,000 would go to the seller, 50% of that $5,000 would go to the buyer, essentially for just kind of like a penalty fee that would come to us. I'll tell you, I've never had to pay that out. But it's an encouragement for a seller to just be excited about our offer, to really understand how much we believe in these buyers, to say that we're willing to put our money where our mouth is, that to really understand the difference between a true approval and a pre-qualification. So this is something that sets us apart, and really just shows my dedication to you guys and your buyers to be able to be successful. So let's chat a little bit about all this and why this matters right now. So, interest rates are on their way down. They are. Mortgage rates follow inflation. We just got some really great numbers come out this week that showed the interest rate that inflation is walking its way down. It is not going to be a fast movement. So we're not going to see interest rates fall in the toilet next week. It's not going to happen. But by the end of the year, we should see something a lot more reasonable. We're estimating mid to high fives. That would be amazing compared to where we've been at the last couple of years. So that is happening. We also know it's summertime. We have a lot more competition in the summertime. We're starting to get a little bit more inventory to be able to buy from. But just because of the time of year, kids are out of school. The weather is beautiful. Who wouldn't want to come up here in this time of year and look at beautiful property in Montana? Of course they would. It's an easy time to sell Montana real estate, a lot easier than January. So we have a lot more competition. We also still have a lot of cash. So how is it that we can make our financed buyers stand on level ground with a cash offer? Because we saw, and the reason why we knew we had to create this was because we saw that listing agents and sellers were looking at a financed offer as being far less superior than a cash offer, even if the cash offer was lower, because they thought the cash was more guaranteed. And so this is why I created this, to say, I want to put my finance buyers on the same playing field. So yes, we do have to have an appraisal most of the time. Yes, I mean, there's some things that have to happen with financing, but I was trying to give my financed folks a little bit more of an edge over what they had before, because listing agents and sellers know that regular little pre-qualification letters, just conversation in a credit pull, can be a little unpredictable. Okay, so this is how we make our offer more solid. So that's why it matters. It also matters that with its limited inventory, we don't have time, or like we don't treat our customers that way, to take a property off the market with a bad financed offer. If I put my name on something, it means something. I'm a firm believer in that. I am very particular about what my letters say. I'm very particular about what's on them. I don't write blank pre-qualification letters. I think they're garbage. A blank pre-qualification letter is ridiculous, because there is a limitation. Like, I have a maximum loan amount that I can finance at 2.5 million. And even if this person is a bajillionaire and can buy whatever he wants, I am maxed out at a loan amount of 2.5 million. So I really can't, like, you can't write a blank pre-qualification letter. Okay. And it matters. Most people have some sort of a cap. I don't believe in that. If you see a letter with my name on it, it's because it means something. And that's with pre-qualification and true approval. We do mostly pre-qualifications. I mean, everyone starts out with a pre-qualification letter because that's what people want when they have a conversation with me. They want to start off, they want to get something tangible in their hands after having the conversation with me. So they'll get a pre-qualification letter. I'll tell you, I do a lot more than just a conversation and a soft pull credit. I do dive very deeply into my pre-qualifications, but it is decided by me, not decided by the actual decision maker. But then for all of our pre-qualified folks, we talk to them about true approval. We encourage them to do true approval. We encourage them to go ahead and do the steps. Reasons why people don't do true approval. They don't have a contract. They don't have a property identified. They haven't romantically attached themselves to a property yet. And so they're not really in a hurry to gather documents. Okay. So they have the pre-qualification letter. But from your guys' perspective, helping me to encourage buyers to continue forward with the true approval because it matters so much with their offer. So we are continuing to chase people for their documents so that we can do a full submission to underwriting to get the true approval. So are all of my buyers true approved? No, they're not, especially if they're putting in an offer this afternoon. There's not time for us to gather all the documents, submit it to underwriting, get a response, come on back by the time you need to make your offer. So there's a timing aspect to it as well. So no time is too soon to start sending your folks my way to get true approved, even if they're not going to buy until later in the year. Okay, it's worth it. Encourage them to do that so that we can do that work for you up front. A lot of times people will wait until the last second. I can't true approve people in 5 minutes. It's going to take some time. Okay. Typically what I see people get true approved in is about a week. That's if they're doing their part. Okay. is they're going to, gather documents, and then we can get them submitted, and then we can issue a true approval letter after they've satisfied all the conditions. So that typically happens in about a week. If the buyers ghost us and they don't do their part, obviously I can't move forward with that, but it really, really helps if you guys will give them a nudge and explain too as well how important it is to do the true approval. We don't charge anything for true approval. Even though it's using the full battery of my team to do the true approval, the only thing that I ask them is that if I'm going to put in all the work and pay all the people to do all this stuff, that if you are going to get a mortgage, that you'll work with us. Now, this isn't like I can't arm wrestle them into that, but it most of the time secures people to working with us. So that's all I ask on that. I don't charge anything extra for that. So this is a tool, you guys. This is something that is going to set your buyers apart from all the other buyers. It's also really important that you can explain the difference between a true approval letter and a pre-qualification letter, so that you can explain to your listing agent why your letter is so much stronger than the next guy's. I also love to call listing agents and tell them how amazing my buyers are. Okay. So if you are putting in an offer, whether it's a pre-qualification or a true approval, I love to call listing agents and tell them how amazing it is and what we're going to deliver on the financing side for the buyer. Okay. So again, this is something that is separating us from the rest of the pack. This is something that is just available with my team, the Wood team at Hometown Lenders. If you have questions or you want to talk strategy about how to get your buyers true approved, please give me a call. I would love to visit with you about it. Or if you just have general questions about how we kick butt in all things mortgage, give me a call. I would love to visit with you. 406-220-0077. And again, my name is Colleen Wood with the Wood team at Hometown Lenders, and I hope you have a great rest of your day. Bye-bye.